Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Mike D'Ambrosio, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate and much, much more. And now, to guide you around the world of real estate, here's your host, Mike D'Ambrosio.
Welcome into Real Estate Radio Live, the podcast series. I'm Mike D'Ambrosio, and in with me today is Joe Kuchera, and I'm giving him a break here to do the intro. Joe, how you doing?
Good. Always great to be together every Tuesday, for sure.
That's right. Well, no, it's Monday.
That's right.
It is Monday. Monday show.
That's right.
We're going to do Tuesday tomorrow.
Don't ask me. See, this is why he's doing open.
Hey, it's all good. So we're going to be talking about, we got some interesting articles to go over, best month and day. What's the best month and day to put a home on the market? Some interesting news from Zillow, and we're going to kind of correlate that with the loan side of things as well. But before we get to that, you can download our podcast on iTunes, Stitcher, or go to RE Radio Live, and make sure to get our app, the RE Radio Live app, in the iTunes store. And also, if you could go in and please rate the show, you can give us some good reviews and feedback. We appreciate that. And for all things real estate, don't hesitate to reach out. You can go to MikeDSells.com or email me, Mike@RERadiolive.com, or you can always text in questions anytime, 408-630-0101. I want to give a shout-out to our sponsors, Starburst Construction and Taps Termite, and Joe will give out his information as well. You want to do that now or at the end of the show?
Anything on the financing side, as usual, I could help you with if you're getting ready to make a purchase, which I know a lot of you are. That is the purchase market here heating up. We're going to talk about that. Or refinance, or if you just need to kind of discuss your financial situation, whether you could buy, sell, or what position you're in, 408-838-9060. You could text or call or email Joe at RERadiolive.com.
Great. All right, so Zillow came out with this article. And we always love talking about Zillow, Joe. We
should rename it.
Yeah. They should.
Pillow.
Yeah, there you go.
Pillow came out with an article.
That's right. I love it. That's good. So they always give us some stuff to talk about and dispute and or agree with. Most of the time it's dispute. So, they came out with this article. So the best month and day to put a home on the market, according to Zillow, a study points to a Saturday in May as a seller's peak opportunity. So homes listed between May 1st and through the 15th tend to sell 9 days faster and sell 1% above the asking price, a new Zillow study says. So they basically surveyed 20 out of 25 metro areas studied. Homes listed anywhere between May 1st and the 15th sold 9 days faster, and again, up to 1%. I'm going to call BS on Zillow on that one.
Yeah, let's not tear it apart, but let's pick it apart in the sense that you mentioned before we came on the air, Mike, which is right. I mean, surveys are great. I mean, you could look at them, you kind of get a basis and maybe figure out what's going on in certain ways. I mean, they're helpful, but in many different ways, all it is a person taking phone calls, picking up the phone, or getting an email and saying, "Hey, what do you think?" Right?
So, who knows who the sample set is? Who knows? Right. So, what I wanted to really talk about today is just looking at the real data. I mean, this is in some major areas of the country that, frankly, are not. There's some of them are still not fully up to speed, not still getting out of the recession. We like to look at Silicon Valley. That's often what we base our podcast around because we are doing it in Silicon Valley. That's where our podcast is based. That's where you and I do most of our business. So if I'm just looking at, here's the thing. Everyone and their mother knows that April, May, June is really the kickoff to, the typical start of the selling season, school's getting out before school gets back in. That's really when people start coming out of their winter hibernation. And I get that. So it makes sense to say that they based an article around the beginning of May. But if I'm just looking at the data here in Santa Clara County, which is the central part of Silicon Valley, there's really no major difference on days on market from February through May. Basically, it's all 1 or 2 days off, usually about 20 to 21 days, maybe 22, depending on the month. But the other interesting thing, they talk about 1% more. If you look at the list to sale price ratio, and what I mean by that is whatever the home was listed at and what did it sell at, it goes down. It goes down throughout the year. So it starts pretty high in January just because. So, for example, if a house is listed at $1 million, it sells for $1 million. That's 100% list to sale price ratio. Okay. So then if it goes above that, that's when you start getting into the percentages. So if I'm looking at February, March, you're looking at 105% list to sale price ratio. So it's selling typically above that. It goes down to like 100% come August, essentially, and it continues to go down throughout the year. So their whole fact of a 1% above, I think, is not accurate. Yeah. Typically, as you get more, so what does this mean to people listening? Typically, as you get more inventory on the market, the list to sale price ratio is going to go down just because there's more to look at, there's less competition. Blah, blah, blah. So that's basically why it's inaccurate from this article standpoint. Yeah.
I think that the other part, though, keep in mind, too, is this is, if I'm not mistaken, this is a nationwide thing, right? Yes. So as Mike mentioned, I realize this is, the good news is the podcast is being heard all over the United States, in some cases internationally, which is wonderful because the education information we want to grow and expand. But for the most part, the focus in the Bay Area for the people that are really trying to reach out to Mike and I for assistance on the buy, sell, and financing side is that the reality is inventory right here is extremely low. It's still low, and some of these numbers are good to look at. But I guess the point I would want to get across, Mike, if you're listening to the podcast and you hear this thing or you read this article, it says May is the magic month, the magic date. Please don't. Take that as a gospel and sit down and go, okay, we're going to wait till May, come hell or high water. No, we don't want to do that. Right. You want to really look at, again, if you're thinking about putting your house on the market, contact Mike. Get the advice of someone that lives this and breathes this every day. Understand what's going on in the marketplace, your zip code, your city, wherever you're selling or potentially putting on the market. That would be the message I would say, Mike. I mean, it's great to read this information, but do what's right for you, your family, your partner, whatever. Don't just take this and just take it to the bank and say, I'm not going to list my house. I guess that's what I'm hoping.
Yeah, no, absolutely. And I think anyone, when you look at the real numbers, and if you're thinking about selling your house, you got to understand that the less inventory, the better for you as a seller.
Yeah,
I mean, it's pure mathematics.
It's true.
The less inventory, the less competition, the less people selling, and the more buyers looking at your property is going to mean more dollars in your pocket.
Yeah, right.
And furthermore, the other point I wanted to get across before we take a break, and then we're going to talk more on the loan side as far as timing goes throughout the year. We're going with the whole theme of timing here today on the show, and it's great to have Joe in on the Monday show. It's awesome. But so the other thing I wanted to talk about was a lot of people read stuff online and they take it as gospel. A lot of people look at their Zestimate and they think it's the end all be all to their value.
Right.
And it's typically not. Although I must say this, I do now as a real estate professional, I have to look at what the Zestimate says, because if I go into an appointment and don't know what it says,
because that's what people are looking at.
That's what they're looking at.
Yeah.
So I got to know. The smart thing is to look at that, know what the number, because I know that's what the number is in their head, unless it's low.
Yeah.
If it's really high, they love it, right? But if their Zestimate is low, they don't like it.
Right.
I have to know that. But the reason I have to know it is because I have to typically dispute it because it's not accurate, especially in an area like we live where there's so many different styles of homes. There's different builders. There's so many different upgrades people have done throughout the years. There's just a lot. And there's been big remodels, and so there's just a lot of things that doesn't take into account and that algorithms can't tell you. Similarly to some of this data that it's just not accurate in the area we live in. Now, maybe it is in some other parts, especially areas that really go into hibernation through the winter when you can't show houses for a couple months due to snow and stuff like that. So maybe that is more accurate there. But where we are, no way, Jose.
Yeah, and I would say the other thing before we do take the quick break is that as I talk through this with you, and hopefully we get the message across to the listeners, is that This is the perfect example of the data and the statistics out there, which we know. We know that 93 to 94% of people start their search online.
Yeah.
We know that. There's information out there. Zillow's one of them. Redfin, the Trillia, you can Realtor.com. There's all kinds of resources. Now, keep in mind, though, that's great to go online, and Mike said, look at this stuff and understand it. But really the bottom line is when it comes down to making a decision, who am I going to list my house with? What is it really worth? You should sit down with a professional like yourself and not only be prepared to discuss what you've researched, but then listen to what you have to offer, right?
Absolutely,
I think that's what you're getting at.
Yeah.
Come prepared because people are going to reference this stuff.
Yeah, they are. And it's not a contentious conversation. No. It's just, talking through the details and making sure they understand that not everything's the gospel that's on the internet, and I know we'll get into it on the other side. I mean, you deal with the internet all the time as far as from a lending standpoint. Yeah. So we're definitely going to talk about that. So let's take a quick break.
Yep.
Joe Kuchera with New American Funding is on, and we appreciate him coming on. As it's weird having you. I'm like doing the intros and outros and stuff like that. But Joe's on. We're having a good time. We're talking timing in real estate and lending.
Perfect.
Stick around. We'll be right back on the other side of the break.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Do you know Mike D'Ambrosio, reputable real estate professional in the Silicon Valley? He was born and raised here in Silicon Valley. He's very excited to be working in a geographic area that he loves and knows well. He firmly believes that this is the best place to live in the entire country. He specializes in Bay Area real estate. Are your family's needs changing? Are your parents in need of changing living conditions? Are your children first-time home buyers? Do you just want to expand your income revenue stream through real estate investments? He would be happy to meet with you and discuss your options while explaining the advantages of using his team to expand your opportunities of owning real estate in the Bay Area. He's dedicated to providing you quality, honesty, and creativity in every real estate transaction. He's highly recommended by many for his attention to his clients' needs and by making sure that your experience is as enjoyable and as painless as possible. Real estate transactions are not small tasks, and that's why they should be done efficiently, smartly, and as thoroughly as possible. That's his promise to you. Whether you're buying or selling, let him put his expertise and experience to work for you and make your transaction a smooth and enjoyable one. The time is now. Don't let another opportunity slip by. Call him directly at 408-630-0101. Email Mike at MikeDsells.com or visit his website, MikeDsells.com. Cal BRE number 0184192. Welcome back to Real Estate Radio Live. For more information on today's topic or guests, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Mike D'Ambrosio.
Welcome back. This is Mike D'Ambrosio with Real Estate Radio Live, the podcast series. Joe Kuchera is in studio today on my show. He's
Mike's
on
show.
my show.
This is Mike Monday.
I'm staking my claim over here.
That. Mike Monday.
I'm just giving him a hard time.
Yeah.
But no, we're talking timing in real estate. Happy to have Joe on the show. We're going to get more into the financing side, which is Joe's forte. And so let's talk about that. So in the first segment, we talked about timing from the standpoint of listing your home.
Right.
I mean, we could even get into buying and what that timing looks like as well. But let's talk about the financing side of things. So where do you want to begin with that?
Yeah, there's I think the first element is that most people will be familiar with, I want to talk a little bit about for a few minutes, is timing in terms of interest rates. So just a real quick summary, most people know that last year, we pretty much saw the last of the all-time low interest rates. Mike, we were in an
RIP on the low interest rates?
That's a good point.
Right.
We were I was just talking to someone about this today. Seriously, for the last 7 to 8 years leading up to 2017, we were in this never-ending ratchet down, all of a sudden take advantage of all-time low rates, which was great for consumers, great for my business, but it's done. And so as we talk about this timing, people might say, what do you mean it's done? I really think for the first time, look at all the data and statistics. When I say we're done, I don't think there's a 1% chance or less that we're going to have lower interest rates anytime in the near future.
Okay.
What I mean is that when you look at the statistics, the data, the Fed raising twice now, and the thought is the Fed's going to raise another 2 or 3 times this year.
Yeah.
And what
one
that
might
will
be
do,
this. Is it this month? Or?
Yeah. I think it could be this month. Yeah. And the thought is, actually, Mike, I heard, and I don't know if it was this meeting or the June meeting. I get confused with some of the conversations, but they're even talking about a 50 basis points. Normally they'll pop at 25.
20, yeah.
But they're talking about a 50 basis point. So
what does that mean to a rate? Basically,
now this is very confusing. So I'll try to simplify it. Believe it or not, the prime rate is not directly tied to the mortgage-backed securities and mortgage long-term 30-year fixed mortgage. This is a confusing thing that one of these days I hope they straighten out.
Yeah.
The prime lending rate is directly tied to your home equity line, your credit cards, your auto loans, your personal loans, student loans, things that are tied. Anything you see, you look at your disclosures, and when it's tied to the prime, anytime the Fed comes out and lowers the prime, it has a direct effect on those loans.
Okay.
Where it does piggyback, Mike, and really have a direct effect on the long-term mortgages, is that anytime the history will tell you when the Fed raises the prime, that means in theory the economy is doing better.
Right.
They're concerned that the rates are too low. They're going to fight off inflation, so they're going to continue to raise the prime. What happens then is the mortgage backs pretty much follow. They're not lockstep. Like, it doesn't mean, for instance, if the Fed raises a prime by 50 basis points, that all of a sudden the 30-year fix is going to go up 50 basis points. But there's a chance that when they do that, shortly after, the 30-year fix could come up an eighth, or it could come up a certain amount.
Okay.
So this is a great conversation about timing. And so just like this article refers to or references May is a great time, I would say right now or as soon as possible, I would make the case if you're at home or wherever you are and you're considering or pondering selling your home and then buying another home, I would do it sooner than later if we're talking about timing today. And the reason why is because, as we just talked about, and go do the research yourself, the odds are is that as the year creeps along or moves along, rates will be higher. What does that mean? It depends on your loan. But if you borrow $500,000, which is an average loan amount here in the Bay Area, $500,000 to $600,000, it's a couple $100 a month if the rate goes up a quarter or so, or the 3/8. It's a big difference. For some people, it may not be. But as we have this conversation about timing, if you're on the fence, if you're wondering, if you're thinking, well, maybe, just maybe, if this article says, or, the conventional wisdom is wait till May, my message would be, don't look at that one in a microscope and just with your blinders on. Look at the entire picture.
Yeah.
If I sell, what does it mean? You had mentioned it's a great time to sell because you're going to get optimum dollars because of his low inventory. Now, when I sell, most people go buy another home. Not all, but most, right? So if you go buy another home, what does that mean when you go buy this other home? Where are you going to buy that home? What is your mortgage going to cost? And so I would say timing a perfect conversation today. In summary, if you're at all thinking about this, I would do it sooner than later. I wouldn't wait till May. I wouldn't wait till June. I wouldn't look at a lot of these magic things. Do what's right for you and your family.
Besides the Fed, when they get together and they come out with the Fed minutes, or they raise the interest rate, or there's different things that happen on a daily basis, different reports that come out that affect that affect the cost of money and affect all of that. Are there any other timing throughout the year, any other major events from a mortgage standpoint that people should look at? I mean, like in real estate,
that's a good question.
We always talk about Super Bowl and tax day usually, and then Thanksgiving's really the start of the death of real estate until after Super Bowl. So, I mean, are there any other things like that in the mortgage side and that relate to it?
That's a great question. I don't think it's as volatile as kind of historic on the real estate thing. But there is one thing I would say. I'm glad you brought that up. I didn't think about that. The first Friday of every month, the jobs report comes out.
Right. Okay.
And pertains to the previous month.
Yeah.
And so I'm glad you brought that up. It's a great question. So I do keep an eye on. That is the one thing I do keep an eye on. If I have someone that's floating a refinance or just coming in for a purchase, and I know we're coming up on that first Friday of the month, what I'll do is take a real serious look and see what is it, are the jobs going to disappoint or are they going to be improved? So the way that works typically as a rule, Mike, is if it looks like, let's say, the consensus is they're going to add 200,000 jobs to the economy, right? And let's say the consensus says, no, it's going to be more like 250 coming up to Friday. That is a good chance that the rates will then react to that and tick up.
Right. Because as the economy does better, the rates get...
Now, on the flip side, if they're calling for 200,000 or that's what they're calling for, and all the economists and everybody goes, hey, we're seeing it's going to be 160, 170, which is going to disappoint the market.
Yeah.
Which means then rates would either stay pretty good or we might even get a little slight, improvement in rates.
Right. Okay.
So I'm glad you brought that up. It's a great question. That's really the thing that I keep an eye on a monthly basis. If we're a ways away, I'll wait. But if it's getting close, especially if it's a purchase loan and they're so time sensitive and critical, I want to obviously try to get the best terms for a client. So I'll keep an eye on that data that comes up.
What about for your thoughts on like a day-to-day basis as someone's going through a transaction? A lot of people that haven't bought real estate need to know they lock a rate on a certain day, that they make a decision with you, with your guidance, your professional opinion. But rates change daily too. I mean, so a lot of people may not know this, but when I started real estate, I actually started in the lending side of things and doing secondary marketing.
You wised up.
Which I got smart. No, but what that was is I wasn't a loan originator like you are. I was doing the rate sheet. I was like a stockbroker for a mortgage company. So I was doing the rates every day. I was watching CNBC. I was watching the markets. I was changing the rates. I was locking loans with secondary lenders and stuff.
Right.
So, I mean, there would be days when the market would be so volatile. And this was back in 2008 when the market was just like haywire. So maybe I have a little bit different of a spin on it. But sometimes I'd have 2-3 rate changes in a day. So maybe from a timing standpoint, talk about a daily thing. If you have a client you're working with that's looking to lock on a day.
Yeah, that's a great question. And timing, too. So the way I handle it, and I think that if you're working with a person who takes their business seriously and really wants the best for you, the consumer, is that when you take the initial information, let's say you're approved, and let's say it's a purchase. For me, the purchases are a lot more critical because you're on a strict timeline. I mean, you're usually talking 30 days or less you have to close that loan. So I have really, really quick, efficient conversations with clients and say, hey, at this point today, the rate's at 4.25 on a 30-year fixed. Here's my take. And this is kind of the way it'll go. I'll say, right now the market's really good. I think in the next couple of weeks, because of this, and this, we actually may see some improvement. So my recommendation would be let's not lock. Yeah. Let's wait it out for a while. But also assure them, Mike, which is this is the important thing. Listen, the market's at 4.25 right now. I think things are going to improve a little bit, so we're going to wait it out. I'm going to hope that it gets improved. I can get you a little better rate. Now, if all of a sudden changes we don't know about, I need you to understand that I will go in and secure that 4.25 so you won't lose that.
Yeah.
And that's the important conversation I think we should have with consumers and customers, is not saying, hey, let's just flip a coin and see what happens. It's not a perfect science. Something could happen we don't know about. Most of the time on a daily basis, rates aren't super, super volatile. Mm-hmm. We could go into a time period like around the election, they were very volatile. But in general, that's how I would handle it. And if you're out there listening to this and you're about ready to purchase, or maybe you're even refinancing, ask these questions of the person you're working with. Don't let them get away with just say, well, I don't know, the rates are the rates, and, just whatever. Press them to educate you a little bit about the market, why you might want to wait, why you might not want to wait. And, they deserve those questions to be answered. That's the way I would handle it.
Good. Okay, one other question before we go. I've just got another minute. From a timing standpoint on closing, so we talk about this on our deals often, and I have you help me out because I always can't figure it out. So if they close on a certain day of the month, they might not have a payment for another month. So talk about that whole situation in a minute.
Yeah, typically, depending on what time of the day you close in a month, you could have You could skip a payment or you won't have a payment. The easy one is, let's say you close, we're in a contract right now, Mike, and the deal closes at the end of March. Your next payment will be May 1st. You will definitely skip April because April interest, whatever piece is going to be in there. Now, let's say that rolls into and you close around the 7th or 8th of April.
Yeah.
Now you're looking at probably not having a payment till June, and maybe even later. And the reason why, we're going to run out of time in a minute, but real quickly, is that mortgage interest is always in the rears. A lot of people forget about that. So when you sit down to write your first mortgage payment for June, you're really making May's interest.
Right.
And so that's a good question. I'm glad you brought that up as well. And those are questions you should ask people like me or whoever you're working with when you're doing a refinance on a purchase.
Absolutely.
Or a purchase.
Well, good stuff. Well, we talked all about timing today. That's really part one. Part two be tomorrow. I'll be on Joe's show, our combo show, as usual.
That's right.
And we'll talk about buying without selling and the possibilities with that. So thanks, Joe.
Yeah, you're welcome.
Fun stuff. Thanks, everyone, for tuning in. I'm Mike D'Ambrosio. For all things Real Estate Radio Live, you go to reradiolive.com. Take care, everyone.
You've been listening to Real Estate Radio Live. For more information on today's program, visit reradiolive.com. That's reradiolive.com. Subscribe to our podcast. Discover more at reradiolive.com.